when you have a major market meltdown, everything gets whacked, including gold and silver, but you have a strong rebound.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Lobo Tiggre from theindependentspeculator.com. Lobo, thank you so much for joining us today.
Thank you, Elijah. Great to be back on the show.
It's great to have you. And we've had you on before regarding, and you were kind of sharing your bear cases for gold, right? And you then said essentially looking forward for the long term, you really don't see many bear cases for gold. You're very bullish. You recently wrote an article going over the common cases that are out there for why gold could fall. And you kind of went through step by step why all of them for the long term, they're not very good cases, not very good bear cases. Can you kind of walk us through that, kind of the four cases that you see are kind of maybe in the mainstream media right now, and why there's really fallacies in those cases?
A good way to frame it to start, and it's important to understand that I am a bull. So if I write about bear cases, it's not because I'm actually turning bearish. It's because I want to make sure that I'm not a blind bull. I want to consider the possibility that I might have missed something or I might be wrong. And so what I actually did was I asked my audience. I have a pretty active Twitter feed, and I know, there's a lot of hate and noise on Twitter and so on, but my little corner of the Twitterverse has some really smart, active, informed people. And so I asked them, what do you think of the viable bears or reasons that we could be wrong about monetary metals this year? And I got four top answers, or boiled it down to four main answers. The first one was Bitcoin, absolutely number one. Bitcoin is eating gold's lunch. And I think we've talked about this before. I think there's absolutely some truth to that there is momentum chasing capital that goes after whatever is going vertical at the time. And, Bitcoin's rising, gold isn't, or at least until recently that was the case. And so that money chased into Bitcoin, flavor of the day. No question about that. It doesn't really explain the larger situation, or the situation doesn't make the case. And we don't need to get too much into the weeds on this. But the bottom line, though, is that if you smooth out the daily noise, that Bitcoin and gold actually do correlate and have been rising really since the inception of Bitcoin almost all the time. The differences are very short term. And I think the reason for that is pretty obvious. They're both alternatives to the dollar. So as the dollar declines, alternatives to the dollar rise. And frankly, I think the Bitcoin crowd has done the gold crowd a huge favor in educating young people about the dangers of fiat currencies. So I'm not saying Bitcoin's irrelevant. I'm saying that I don't see Bitcoin as doom for gold. So the second most common bear case that was suggested by my audience is the deflation case. And there is some logic to that in the world in which gold is considered a commodity as opposed to money. But at any rate, I just don't accept that this is at all likely to happen. In the first place, we really haven't had any deflation. People have talked about deflation, but even if inflation has been less than what the central bankers say they wanted, poor Mario Draghi never got his goal reached, and poor Jay Powell, he can't reach his goal. It's only because they know that if they go too far, it turns into hyperinflation. It's not that they couldn't create inflation. If they sent everybody €1 million or $1 million, they would have had inflation. So they all know that you can go too far. And so where they fail is in finding the balance. But that doesn't mean we've had deflation. When have prices gone down in your memory, Elijah, or in the audience's memory, unless you have silver hair, you probably don't remember a time when prices were actually going down, broadly speaking. So the idea that, okay, I get that there's economic trouble. We may have some deflationary pressures. I get that. But at the end of the day, we've not seen any deflation either over the last decades. And we have seen lots of money printing. And the one thing I want to stress is that, the MMTers and others keep saying, oh, well, it doesn't matter. We've been printing money like crazy since 2008, and we haven't had any inflation. So it's safe. Well, it's not safe. and the money printing that we've seen just over the last year, what happened in 2008 is peanuts over what we've seen now. I mean, what is it? 20% of all the money in the world has been created in the last year. This is really, really crazy stuff. And the consequences of this, I'm not going to tell you what's going to happen in the future, but I will tell you it's dangerous to write it off and say, oh, that's not a problem. So bottom line, at the end of the day, the printing press always wins. Throughout history, it always has. And the printing press has been running nuts. So no, I'm not worried about deflation. The third bear case is manipulation. You get a lot of people who think the price of gold is heavily manipulated, not what it should be. And I want to make clear that this is another rabbit hole we don't need to go down. I'm not saying there's no manipulation. I'm saying that whatever manipulation there is, it didn't stop gold from rocketing up to 1900 in 2011. It didn't stop gold from rocketing higher last year. So when there's a bull that wants to run, whatever manipulation out there, whatever different price it might have run to, it doesn't stop the bull from running. And if you believe that everything is manipulation and they can control the price of gold, then that really gets you out of the market. There's no point in investing if it's all controlled by these evil powers that be. So I think the manipulation card is played too strongly. It chases you out of opportunities if you really believe that's all there is to it. And then finally, there's the no safe haven demand. This is sort of a basket of various different reasons that my audience gave me. But basically, it's happy, happy, joy, joy on Wall Street. We got new records in the Dow and the S&P. So if risk assets are doing great, why would you need safe haven assets? Yeah, there's some logic to that and maybe some of that. But it doesn't really explain how, the number one, it doesn't explain away the number one relationship that we see in gold, and that is its inverse relationship with real rates. It also doesn't explain why ever since the Powell pivot in late 2018, gold and equities rose together. In my mind, both of these are aspects of inflation. So those are the bear cases that the audience brought to me. 8,000 people thought about it, and those are the ideas they came up with. I think they're worth thinking about, but those are my reasons why I'm not losing any sleep about gold heading lower.
You bring up so many interesting points there. I kind of wanted to step back. Now, you mentioned Bitcoin. One of the things as you were talking, I was thinking about how it has brought in so many new people to the alternative currency community, if you want to call it that, right? And it seems like it's bringing in a lot of young people, right? So I don't know if there really is that much competition as much as it's bringing light to the fact that, maybe these other standard, national currencies aren't as stable as we think they are. And it's bringing light to that, which can only be good for gold.
Sure. One way of looking at it is, the Bitcoin slice of the pie as competition to the dollar 10 years ago, you couldn't even see it. Now it's bigger. So Bitcoin's slice of the pie is getting bigger. Fine. But if the whole pie is getting bigger at the same time, that doesn't mean that gold has to get smaller. But and again, maybe you don't know, Elijah, but when I started in this business 16, 17 years ago, I'd go to a conference and the entire audience would have white hair, it seemed. And now you go to a metals and mining conference or to a gold show, and there's lots of young people there. I have subscribers. I have clients. I've got one just wrote to me, said he's 21. He's from Germany. He's 21. And he's just sort of gotten into the space, and he really appreciates the sort of educational aspect of what I do. He has so much to learn and so much geology he wants to figure out, all this stuff. I think that's fantastic. 21. He was, 6 or 7 years old when I started this business. I think that actually the crypto phenomenon has done the monetary metals space a favor.
And you also mentioned about the manipulation. And if our viewers are interested in learning more about that, we actually created a playlist to kind of give all perspectives on that I'll put in the link, put in a link in the description of this video. But regarding that, I think you make a good point how, there might be manipulation in the precious metal markets. That's a debate for a different day.
But sorry, let's not even say might be. Let's say there is.
Let's say there is, yeah, but it doesn't explain everything.
Right. So my problem isn't that people say there's manipulation. I mean, clearly, when you have tons of silver dumped in the wee thin hours of the market or something like that, there's no good explanation for that. Now, that isn't proof, by the way, but there's no good explanation for doing that other than trying to whack the market. Right? I accept that. I have no problem with that at all. But if from there we go, oh, it's manipulated, so there's no point in trying to understand anything. There's no point in trying to forecast anything, because it's all manipulated. Well, if that's true, you shouldn't be in this market because it's all It's all going to be set. Somebody's going to push a button and you're screwed. Sorry, that's the technical description of what. So if that's the case, I don't know, go buy Walmart or Bitcoin, something else. I don't know. I'm completely sympathetic to the case. And, as a libertarian, of course, I'm suspecting the government of having, reasons to want to keep the price of gold low. But I just don't want that to keep me out of the market. And if I had, I wouldn't have two quarters to rub together right now.
Definitely. I mean, it seems like there are different interventions, right, in markets, and we don't have a perfectly free market. It's been said that if you don't have like the currency that you're using, if that's not free market currency, then you don't really have a free market. At the end of the day, though, free market forces prevail. And I think that's maybe what you're getting at.
Yes. Or again, the summary that whatever manipulation there is, stipulated there is, it didn't stop gold from going over $2,000. Now, you can say, I should have been over $3,000. Well, fine, but it went over $2,000. And if you were in the stocks, you made a lot of money last year. And if you said, oh, it's manipulated, so I don't want to invest in this space because it's all manipulated, well, you missed out on that. And, as a person who is a bull, I just think that it's a mistake to get so fixated on the manipulation that you don't look at the opportunities in the space when the bull wants to run.
Now, in the article that you wrote, you also mentioned that there are good bear cases for gold, but more like short term, right? Long term, you're still bullish. Can you go over a couple of those? One of them you mentioned is that nominal rates could rise faster than the inflation rate. And so real rates could continue to rise, and that's bearish for gold. So if you can expand on that.
Good on you for carefully teasing that. I know you have all these inverse relationships, and the bonds, when they sell, the rate goes up. So it can be very confusing, but that's exactly right. And here's the thing, gold is more complicated than any one thing, but the single most explanatory variable in all the gold space since 1971 is the real rate. Right? Real rates are negative. That's bullish for gold. Real rates are moving more negative. That's very bullish for gold. We've seen a very, very strong relationship. So what's happening now is that in real rates are the nominal rates minus CPI. Now they should be maybe, real rates would be not using CPI because that's a government manipulated number, if you will. But that's the number that traders in New York and London and other places use. It's the most accepted number out there. So you can't just say, okay, well, ignore the CPI because then you have no tool. But at any rate, so here's the thing. Nominal rates are rising, but CPI hasn't changed yet. It'll come out tomorrow. We'll find out if it changes. But even if it changes significantly, it would have to rise more than nominal rates have risen for real rates to appear to be turning negative. So, and the takeaway from this, never mind all the math, the takeaway from this is that, everybody, even the Fed, even the powers that be are talking about, oh yeah, there's going to be some transitory higher inflation ahead, but everybody's kind of expecting it to slowly ramp up. Unless it really goes through the roof, unless there's a number way beyond what anybody expects tomorrow, you're going to have the nominal rate will be rising faster than the CPI, which means the mathematically calculated real rate will appear to be less negative, and that would be bearish. And that could persist for some months if nominal rates keep on moving more than the CPI. I do think that would be transitory. I do think that eventually the CPI more than catches up. I also think that the Fed won't let rates rise too far. So even if the CPI rises modestly, even if the government massage CPI rises modestly, at some point, the benchmark 10-year starts causing pain if it rises too high, and the Fed has to step in. So I can see a case where this single most explanatory variable could be bearish for gold in the months ahead. But it absolutely would not last. For the very reasons that it would happen, it can't last. And that would make an opportunity if we do see this thing whack gold prices and silver prices lower in the months ahead.
A few of the guests I've had on recently have said that we could be seeing a market crash sometime soon or sometime this year. You've also pointed out how that could be short-term bearish for gold.
Sure. And, this one isn't rocket science. Just look at last year in March. We saw everything got whacked. It's normal. You have a waterfall event, as they say, and everything does get whacked. The mistake is that some people say, oh, there's something wrong with gold. Gold's your safe haven asset. It shouldn't be going down in an emergency. Well, no, that's wrong-headed, because what's happening is that gold is doing its job as the fundamental refuge, of last resort, of liquidity there. And when people are getting margin calls and having other liquidity squeezes put on them in a crunch, they sell what they can. And you can always sell gold because it always has some value. So we saw this in 2008 as well. We've seen it in preceding data. I wasn't there in the market to watch it, but I've seen it in the data, 1987, preceding episodes. When you have a major market meltdown, everything gets whacked, including gold and silver. But you have a strong rebound. So that absolutely, forget the nominal rates and real rates opportunity. That might take months to play out. If we get a market crash and you get one of these spikes, I think it'd be like last March, where the immediate liquidity squeeze would create a fantastic buying opportunity in the metals themselves and certainly in related equities. And then I think you'd see, a screaming rebound afterwards. So something to take advantage of if we should be so lucky.
Definitely. I mean, that's what we saw in, 2020 when we saw that big dip in gold and silver. Silver went down like below $12 just for a little while, but then it more than doubled after that. So yeah, that idea of that fast rebound is pretty interesting, and possibly an opportunity to make a little gains trading. But
sure, I'm not going far out on a limb there. Realistic, and I'm not really saying anything other people haven't said, Elijah. The one thing I guess to say, and this is something I would have to do a mea culpa on, is to not get too clever about when to buy. If there's a big waterfall event like that and things get stupid cheap, just buy it. Don't worry about where the bottom is. I have to say that I was a bit late buying the stocks. I didn't think the meltdown last year would be over so quickly, particularly for the stocks. So I didn't buy in, as soon as I could have, and I made less money than I could have last year. I still made money, but that lesson made an impression on me. We know what's going to happen in a case like that. So don't get too clever. Just buy when there's a good opportunity.
I think that goes back to like the primary reason for owning metals is really for insurance. It's not to make a profit, but I mean, hey, if you can.
Sure. We're talking stocks here, right? I don't trade gold and silver. I stack. They're intended to be long-term savings. If I never have to cash out any of my gold or silver and I can, bequeath it, that'd be fine with me. That's what it's supposed to be for. When I'm talking about, speculation, that's the stocks.
Definitely. And before we let you go, kind of getting on the topic of the inflation rate, getting back to that, you say that is, if real rates continue to rise, that could be short-term bearish for gold. Now that kind of depends a little bit on, where the inflation rate is, and we're going to have the CPI come out tomorrow. So what are you expecting from the CPI rate coming out tomorrow?
That's a crystal ball question. I really don't know. I mean, we saw a significant increase from January to February. If you plot that as a line, it doesn't really take us very high. It takes us over 2%, not much. And I don't think that would shake the market much. If it shot up over 3%, or 4%, who knows? I mean, we're dealing with these, historic times, and in the year-over-year change, which of course is artificial. I know that. We all know that's artificial, but still, it'll be an eye-opener. So I honestly don't know. I mean, we are talking about historically, off the charts kind of times, and so. It could be, who knows? It could disappoint. It could be that with, the next wave of COVID having had an impact, that inflation rises less than everybody's expecting this month. tomorrow. The reported number, which so I'm not going to tell you what it's going to be. What I will tell you is, so what do we do if inflation seems to disappoint? And it's, that's going to really be bearish for gold, because your real rate will appear that much higher. If inflation, comes in where expected, then, not much fireworks there. If it way overshoots, that's when things get interesting. That's when the real rate will appear to turn back up again. And that's when people might start questioning the narrative from the powers that be about how in control they are of all this. So I don't know which it's going to be, Elijah, but I know that as a long-term gold and silver saver, I want to buy while I can and ahead of these things. As a stock speculator, I've loaded up before this news, and if it disappoints, I'll buy more. If it takes off, I'll be glad that I bought.
Definitely. Well, Lobo, Tiggre, we really appreciate your time today. Before we let you go, if you'd like to share with the viewers any way that they can find you online, I know your website and Twitter is a great place to go. And if our viewers would like to hear more of these interviews, please hit the subscribe button and the bell icon so you'll be notified for all the new interviews coming out. But Lobo, where can people find you?
Well, it's very simple. It's independentspeculator.com. Thank you for the question. And we have a free weekly digest that we put out every Saturday. And I promise we don't spam people if they sign up. You don't get a flood of advertisements. You get one weekly email. And then it's up to you where you go from there. Lots of free resources. And of course, I hope to do business with you if you find my analysis useful.
Fantastic. Well, yeah, thank you so much, Lobo.
Thank you, Elijah. Have a great one.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.